All right, this one specifically with regard to Jabil Circuit, which is a contract manufacturer of a lot of electronics, also part of that Apple supply chain. Those shares right now down by about 9%, following comments from the CEO saying that he does not expect any material improvement in their profit margins until 2021, as it spends some more time to kind of spend on growth initiatives, that sort of thing. Those shares down big as well. Obviously, there's always a question for tech manufacturers whether or not the trade issues are part of that whole discussion. They were not dealt with straight on, but maybe alluded to in some of those comments. But again, Contessa, an interesting development here for a lot of companies that we watch closely with regard to how trade and tariffs affect corporate America. Back over to you, Contessa.
So, Ed, what do you think of that? What's your reaction?
To the...
Yeah, to Jabil.
I don't know. This is... I'm waiting for 2020. What is it? That's
3 years from now.
Far out. Yeah, I don't...
I mean, the question is, and I don't know if Dom is still there, I mean, the question is, you know, does this indicate anything about Apple, or is Apple putting the screws on its suppliers in terms of, you know, reining in their costs in order to keep the business, keep the Apple business?
It's interesting because this is Mark Mondella, who's the CEO of the company. He basically said, quote, you wake up one day and there's a tweet. You wake up 48 hours late, something else is going on with regard to what's happening with the trade war. So he's very well aware of what's going on right now, as I'm sure a lot of CEOs are. Whether or not these companies actually end up saying something definitive about their profit margins is something else. We've also noticed a general trend, guys, among S&P 500 companies, that fewer of them are making comments about their future expectations with regard to results. Some of it may be due to things like the trade and tariffs issue and the clarity around them, or some of it may just be some extra conservatism with regard to the current reporting environment that we're in. Whether or not you believe the trade and tariff issue will have a material impact becomes at least a question for a lot of CEOs, but they are, in many cases, perhaps not choosing to take it head on. In this case here, they are saying 2021 is the next time that they could see market profit margin expansion. And of course, tariffs are probably going to play into that only because we know that those cost structures are going higher for many of these tech companies, especially suppliers for high-tech consumer devices.